Welcome first view common students to exam tips and tricks channel. Various transactions are given. Here it's been asked to equalize accounting equation. Assets is equal to liabilities plus capital based on various transactions. Various transactions are given in the question. Rohan Traders has following transactions. Prepare accounting equation. Transactions are: business started with cash, rupees 4 lakh. B. Cash purchases, rupees 50,000. C. Cash sales, 50,000. Cost of the goods, 40,000. D. Furniture purchased for cash, 20,000. Paid commission, 4,000. Bought from Ram, rupees 5,000. So these are the transactions. Based on these transactions, we need to equalize. Assets is equal to liabilities plus capital. So this is a solution. First transaction, business started with cash, rupees 4 lakh. Business has been started with cash. Cash is an asset. Firm's capital also will be increased. Show cash and asset side. As businesses started with cash, rupees 4 lakh. 4 lakh is equal to firm has no liabilities. Capital of the business will be 4 lakh. So we can equalize 4 lakh is equal to 4 lakh. Second transaction, cash purchase rupees 50,000. In the sense, goods purchased by the firm for cash. So it is a cash purchase transaction. So firm's cash balance that will be affected. So 50,000 that must be deducted from cash amount, which is 4 lakh. So 4 lakh minus 50,000, that will be 3,50,000. So there is arrival of goods. So we need to show stock and the asset side. Stock is an asset. Show the value of stock as 50,000. Firm has no liability. The capital of the business will be 4 lakh. So we can equalize 4 lakh is equal to 4 lakh. That is the second transaction. Third transaction, cash sale of rupees 50,000. Firm has sold goods worth rupees 40,000 and it was sold for 50,000. The cost of the goods is 40,000 and it has been sold for 50,000. So there is a cash sales transaction. So C, as it is one of the cash sales transaction. So there is arrival of cash rupees 50,000. So 50,000 has to be added to 3,50,000. So third transaction is based on the second transaction. Present worth of cash is 3,50,000. So cash has been arrived. So 50,000 that has to be added. So the present cash balance will be 4 lakh and goods are sold out of the stock. So the value of the stock is 40,000. So 40,000 has to be deducted from 50,000. The value of stock is 50,000, out of which 40,000 stock that has been sold out. So 40,000 has to be deducted. Firm has no liabilities and there is a profit of 10,000. So the firm has received 50,000. The value of the stock is 40,000. So there is a profit of 10,000 that must be added to capital amount. So that will be 4,10,000, which is equal to 4,10,000. Next, D. Furniture is purchased. Firm has purchased a furniture worth rupees 20,000. So it is a cash purchase transaction. So the present value of cash is 4 lakh. For purchasing furniture, 20,000 has been paid by the firm. So 20,000 has to be deducted from 4 lakh. So the present cash balance will be 3,80,000. Stock is 10,000 and furniture, as it is being purchased, furniture is one of the fixed asset that appears under asset side. The value of the furniture is 20,000. That is equal to firm's liability is nil and capital amount is 4,10,000. So we can equalize accounting equation. 4,10,000 is equal to 4,10,000. Next, E. Paid commission. So when the commission is paid, that affects cash balance as well as capital of the business. So 4,000 has to be deducted from the cash balance. Present cash balance is 3,80,000. 4,000 has to be deducted because for the payment of commission. Now the present cash balance will be 3,76,000. Stock 10,000. Furniture 20,000. Liabilities nil. This 4,000 has to be deducted from capital amount also. So that will be 4,06,000. So we can equalize 4,06,000 is equal to 4,06,000. Last transaction, bought from RAM worth rupees 5,000. So it is a credit purchase transaction. RAM is a supplier. So firm has a liability of 5,000 because it is not a cash purchase. It is a credit purchase of goods from RAM. So cash balance will not be affected because it is a credit purchase transaction. Cash balance will be 3,76,000 plus there is arrival of goods. So the stock value was 10,000. There's 5,000 worth stock that has to be added. So the present stock value will be 15,000 plus furniture will be 20,000. As it is a credit purchase transaction, firm has a liability of 5,000 plus capital amount will be 4,06,000 and we can equalize 4,11,000, that is equal to 4,11,000. So this is how this is accounting equation based on various transactions that must be disclosed. Thank you.